Hello viewers, welcome to class today. We are looking at Likely JAMB Economics past question. Please come along with me. Marginal cost is, in other words, what is marginal cost? Total cost divided by total product, total cost minus fixed cost, average variable cost minus fixed cost, the addition to total cost resulting from production of one extra unit. The correct answer to this question is option D. The word marginal means extra, one extra, the additional made. So it could be marginal cost, it could also be marginal revenue. So this time we are talking about cost, which means whatever you spend on the extra you added to your total production. Option D is the correct answer. The next question. The supply curve of a locally produced good may shift to the right if you have been following us on this channel, we have done a lot on the explanation between the shift in supply or demand and of course the change in supply or quantity demanded. Okay, and if you watch our earliest videos, we said that when we talk about change in quantity supply, it is the price of that commodity that is a major factor contributing to this. All right. But when you talk about shift, the word shift is a total decrease or increase in supply or in demand, not as a result of price, but because of other factors that affect either demand or supply. Okay, in this case, we are talking about supply. So it is not the price of the product per se that brought about the shift, okay? Because the price seems to be constant when you talk about shifts. It is other factors. So let's see any of these options that could be seen as other factors that affect the quantity supply. The price of the good first, like I said earlier in my explanation, not the price when you talk about shifts. The price is only applicable when you talk about movements along the same curve. But this only shifts either to the right or to the left, which led to all production for another curves along the same price. Okay? So the price of a complementary good rises. The price, there is an improvement in technology. There is a fall in factor of productivity. The major factor that brought about shift as far as this question is concerned is the improvement in the level of technology that brought about either, I think, absolutely increase in quantity supply. All right? The next question. The scale of preference shows. You know, this is one of the basic concepts of economics. When you talk about wants, you talk about scarcity, you talk about opportunities cost, you talk about scale of preference. So what is scale of preference? From the word preference, prefer. Which product do you prefer? That's talking about arrangement of your product, of your desire, of your wants, on how important they are to you. So individual scale of preference differ from person to person. All right? Expenditure pattern of consumers, the ranking of wants in order of importance, a consumer's money income, how to reduce wants. From my explanation, the correct answer is the ranking of individual wants in order of importance on how pressing they are to you. That is priority, scale of preference. So option B is the correct answer. We look at the next question. The main objective of marketing boards in West Africa is to, why was marketing board introduced? Basically, in West Africa, it is a platform to regulate price. Okay, we have marketing board for cocoa, for palm produce, and all those things. Cotton in those days when agriculture was a mainstay before the introduction of crude oil. All right. Apart from trying to regulate the prices, it's also help to maintain the income of the farmers. Okay, at that time. So let's see which of them suit into this explanation I gave. A, pay higher wages to workers. B, stabilize producer prices. C, fix prices of imported goods. D, control interest rates. The most correct answer to this question is option B, stabilize producer prices, so that no one will sell unnecessarily beyond the others in attempt to make what? Abnormal profits. All right? In the diagram of a production possibility curve, all right? I know if you have seen production possibility curve before, something like this, huh? And we said any point along this curve is what? Is full utilization of the available resources. Anyone under is underutilization. And then this is over and above the full utilization of the resources. Okay? So let's see. A point inside the curve. This is inside the curve, right? What does it indicate? Full employment of resources, unemployment of some resources, impossibility of production, higher opportunity cost. The answer is unemployment of some resources. These resources are available, but they are not engaged in the course of productivity. And that's why I have those points inside the indifference curve. All right? The next question. Developments outside a firm which reduce its cost of production are called. Take note of the word outside, not within the frame of the industry or the company. All right? Internal economies of scale, agglomeration economies, external economies of scale, supply of skilled labor. All right? The answer is what? External economies of scale. All right? The next question. A firm is at its optimum size when? At what point do you say a firm is optimum? Optimum is the peak of productivity, right? It has a motive to increase output. It produces the greatest output at a minimum cost. The marginal cost equals what? The marginal revenue. Marginal cost is less than marginal revenue. The answer here is what? Option C. When the marginal cost equals the marginal revenue. And that's why we call it what? The optimum point. All right? Because from this point, you could have a diminishing return or diminishing marginal utility in any way about. Option C, correct. Under the ECOWAS agreement, a Nigerian can enter and stay in Ghana without a visa for 100 days, 30 days, 90 days, 14 days. The answer is 3 months, which is equivalent of what? 90 days. Although at the moment it's not strictly being applicable because of so many factors, corruption and what have you. All right? But on paper, based on agreement of ECOWAS, it is what? 90 days. Okay? Option C. The petrochemical industries are located in river states, mainly because why do we have petrochemical industries all around river states? Why? A, coal deposit, palm oil product, favorable soil, oil deposit. Of course, it's because of the presence of what? Crude oil deposit. Option D is the correct answer. All right? We look at the next question. The table of total and marginal utility illustrates the law of when you have utilities, you're talking about the satisfaction derived from a want or from a service, from a product, from a good or from a service. All right? So when you talk about the total, that is total product, and of course the marginal put together, what law is that? Remember, from the marginal utility says that one extra additional consumption. The more you consume one additional consumption, the less satisfaction, the less utility you derive from it. So from that word, the less utility, which will be suitable for the answer? Increasing returns, diminishing marginal utility, increasing total utility. The answer, of course, is what? Option C, diminishing marginal utility, which means, as for instance, we take the first bottle of Coke, it seems to simmer. You enjoy it at a peak. As you take the next bottle and the consequent bottle, you observe that your satisfaction continues to diminish from that bottle of Coke. That's what we call law of diminishing marginal utility. Okay? The next question. Pricing and output decisions of sellers are highly interdependent that means interrelated. It means that the seller can either increase the price or the output of the product, but not both at the same time. So in what kind of market do you have this? Monopoly, oligopoly, monopolistic competition, perfect competition. If you have been following us all along one of our videos, we treated and discussed monopolistic competition and of course perfect competition. And we also explained poly and sony as far market is concerned. In this case, we said in monopolistic competition, though the producer is the monopoly of his product, but his product is competing with similar product within the market. So he is limited from increasing both output and price at the same time. He can only do one. And that's why we say they are interdependent. Okay? So the answer is option C, monopolistic competition. All right? Money is a poor store of value in a period of stable prices, deflation, stable exchange rate, rapid inflation. Store of value is one of the elements or characteristics of money. But you and I know that during inflation, keeping money either in the bank or in your house does not make a lot of economic sense. How? Because what the money can buy today, if you keep it by 2 months or 3 months' time, it will not be able to buy it again. Why? Because of the continuous increase in price, known as what? Inflation. So when there's rapid inflation, the whole rapid means, it's just growing. Keeping money then becomes what? Economic waste. Because what the money would have done now, we're not able to do it later date. So the answer is what? Rapid inflation, option D. I hope you're enjoying the class. Please subscribe to this channel and share with others to enjoy more. The next question, the price mechanism is, when we say price mechanism, another name for it is price system. And this is operational particularly under laissez-faire economy, that's free market economy, which everybody calls what? Capitalist economy. In this case, it's talking about the determination of prices of goods and services by the interactions of the invisible hands. What are the invisible hands? The invisible hands are the market forces of demand and supply. Okay? So that's what price mechanism is all about. It's the opposite of what they call price control. And price control is under command economy that people call popularly socialist economy. Okay? So price mechanism is what? A, rations scarce goods among many uses, fixes only the prices of producer goods, ensures equal distribution of income, reduces scarcity completely. The answer to this question is A, rations scarce goods among many uses. Why do you have this price mechanism? Because the major problem why we study economics or why we do economics at any point is because we have limited resources chasing after unlimited wants. Okay? And that is why we have to design a way by which such available resources can be properly and judiciously utilized for the best alternative, which led to what? Making of choice and, of course, opportunity cost. So the best answer to this is rations scarce goods among many uses. The goods or the resources are scarce, so we have to make sure we apply for the best uses. Okay? The next question. Scarcity in economics means, just like it's related to what I just said at the moment, there's this wrong assumption when we say something is scarce. People believe that it is not available. All right? But in economics balance, when we say something is scarce, it doesn't mean it's not available at all. It means that it does available, but the availability is not corresponding or sufficient enough to meet what? With the demands. Then we say it is scarce. All right? So let's see. Human wants are limitless. The economy has very few resources. The economy can scarcely produce anything. Resources are limited in relation to wants. So in economics, the concept of scarcity comes to place, particularly when we compare the available resources with desired wants. In economics, we believe that human wants are unlimited. Human wants are so much that they are insatiable. All right? Because as you satisfy one want, you want another stuff. As you satisfy that stuff, you want another stuff. So human wants are limitless. They are insatiable. All right? But the available resources to meet up with this unlimited one is limited. All right? And that is the concept of scarcity. So the correct answer to this question is option D. Option D. All right? Let's see the next question. Economics is often described as a social science Because it. So why do we compare economics as science? Why is the language science introduced to economics? Why? A, it performs laboratory experiments. We never do that. We are not like the pure sciences, chemistry, physics, and biology. Okay? It uses controlled experiment only. We don't. They are the one in science laboratory that they develop theories and hypotheses, and that is being tested in laboratory before they form laws. All right? We don't do that. C, it uses scientific method to explain phenomena and predict events. Yes. And D, relies only on field work. No. So the correct answer here is C. In our study of human behavior, we apply scientific method, scientific approach to see how human they behave, particularly in relation to what the sellers and of course the buyers. Option C is the correct answer. We see the next question. Utility is satisfaction derived from, I mentioned utility. When I say utility, it's talking about satisfaction. The satisfaction you get either from a good, a product, or from a service. All right? So, as you are watching this video, what is your satisfaction? That's your utility for watching it. All right? So, it's derived from production, distribution, consumption, demand. The answer is what? Consumption. The satisfaction derived from consumption. Option C is the correct answer. Okay? The arithmetic mean of this data is, now, what do you mean arithmetic mean? The mean is talking about the average. The average is the mean. So for you to get the arithmetic mean, which means the average, you have to add this data together as this. We have 5 plus 8, that's 13. 13 plus 10, that's 23. 23 plus 15, that's 38. 38 plus 24, I think that should be 62. Okay? And 62 plus 28, that should be 90. So we have 90 over how many set of data do we have? 1, 2, 3, 4, 5, 6. Over 6. All right? Then 6 here, 1, 0, 1. Okay? Then 6 in 9, we have 3. What do you have remaining? Sorry, 6 in 9 is 1. Then what do you have remaining is 3. So 6 in 30 to us is 5. Because 6 times 5 is 30. So your answer is what? 15. Okay? So the arithmetic mean or the average of this data is what? 15. Option B is the correct answer. Okay? Let's go to the next question. A method of analysis that draws conclusion from data rather than from already known principles. I just finished solving the data now. All right? Good. So when you make deductions, when you make inference, when you make statement based on data given to you, not based on principle. In economics, we have many principles in economics, like comparative advantage and what have you. We have laws of demand, of supply. We have diminishing return and all those stuff. So when you make statement based on those principles, then we know what you are talking about. But this time around, when you are drawing your conclusion, you are making your statement based on data that are given to you. What do we call it? Deductive, inductive, normative, positive reason. The answer is what? Deductive. Because you are deducting your explanation, your position, based on what you saw in the data. Okay? A is our answer. Economics is a social science. This is the second time we're having social science being repeated here. Okay? Economics is social science concerned with the proper use and production of goods and services, distribution of wealth, allocation of resources for growth, creation of utility. Anytime you see the word allocation of resources, it will attract your attention because that is the basis of economics. Allocation of the available resources. Because these resources will always be scarce when you compare it to what human wants. So how to properly allocate it for judicious use is that's why we study economics. All right? So option C is the correct answer for this question. Now, the next question. The money market equilibrium is defined as, anytime you talk about equilibrium in economics, particularly when you have to relate it with demand and supply, it is a point where demand equals what? Supply. That is equilibrium. It is a good position, right? Because after this point, either below or above, is going to have one way or the other negative effect on the economy. All right? So let's see. The money market equilibrium is defined as A, when demand and supply of money are equal, okay? When demand is greater than supply of money, when demand is less than supply of money, when supply is greater than demand of money. You know, when you talk about money supply, in this case, when there is excess money in circulation, you know the laws that the money will start losing its value. Too much money will start chasing after limited goods, which is inflation. And when you have the opposite side, the reverse of the side of the coin in that statement, when there's insufficient money, there will also be deflation, the opposite of what? Inflation. But in this case, we're talking about equilibrium. So the answer is option A, when the demand and the supply of money are what? Equal. All right? That's equilibrium. But in economy, you may not continually or consistently have equilibrium. You could shift to this side, that side, based on what? The economic policies, either by the central bank through the monetary policy or by the government through fiscal policy, to see how they can balance or maintain the equilibrium of money markets and money supply. Okay? Now we'll go to the next one. An economic condition in which much reduced economic activity coexists with inflation. The economic activity reduced. Likewise, there's inflation. What do you call that? Stagflation, inflationary spiral, slum inflation, inflationary gap. The answer is stagflation. Stagflation is an advanced stage of inflation. Stagflation is very terrible. It can make an economy to enter into recess. When we say stagflation, it's talking about high rate of unemployment. You see? Then there's high rate of inflation. And of course, there's low productivity. Low productivity. This is what Nigeria is passing through at the moment. Unemployment is at its peak. Prices of goods and services are skyrocketing. And of course, level of productivity, particularly within the economy, is very low. We depend so much on importation. So that's what they call stagflation. Stagflation. All right? Option A is the correct answer. So let's see the next question. An instrument used by the central bank to fix commercial and merchant banks' total credit to the domestic economy is, I mentioned something like this in one of the questions as I was trying to explain earlier. The central bank has a way of introducing policies that will control availability of credits facilities, especially among the banks, and also has a way of monitoring the supply of money in the economy. Okay, so this one is particularly talking about credit, total credit available within the domestic economy, right? Monetary policy, fiscal policy, credit ceiling, open market operation. The correct answer to this is option C, credit ceiling, which means the limitation. There will be a limitation to how much the bank will possess or can give to their customer, either for individual limitation, or firms. You have limitation for firms, you have limitation for individuals. For instance, at the moment in Nigeria, there is a limit amount you can take to the bank, operate in the bank per day. The same either for individual or for firm. At that point, a question will come for you once you exceed it. All right, so credit ceiling. We'll go to the next question. The labor force of a country is determined by when we say labor force, we are talking about the total number of population that are available to work, the workforce. The total number of population that are available to work, the workforce. Now, people may be within the workforce age, which is usually between 18 and thereabout, retirement age of 55, thereabout, okay, or 60. People may be within this age bracket, but they may not be available to work. So what we are talking about is the total number of population or people in that country that are within that age bracket, okay, and that are available to work. We'll call them the labor force. So let's see which of these options is suitable for that explanation. A, geographical distribution of the population, no. Age structure of the population, yes, I mentioned age structure, but the fact that somebody is within the age structure of workforce is a factor. But if such person is not available to work, then you can call him a labor force. Let's see. Number of people available to work. Yes. The sex distribution of the population has nothing to do with this. That's a distraction. So the correct answer to this question is option C. the number of people available to work, they are the one they call the labor force of a particular country. All right? We go on. The transfer of public shareholding in corporations to private enterprise is. Now, when we say corporation, something comes to your mind. Corporation means government-owned companies. Okay? Government-owned companies. They are called public corporation, public utilities, or public enterprises. All right? Government-owned, government finance, government control. All right? Now, when there's a transfer of the shareholding means the ownership, the capital. The capital of the business now being transferred to private. Private are individuals, all right? Individual shareholders. When such happen, what do we call it? Incorporation, concession, privatization, commercialization. The answer is what? Privatization. Many government-owned companies in Nigeria have been privatized. That is, they transfer the ownership from government to private individuals, right? That's privatization. But when we say commercialization, we need to have understanding of that. When a public corporation is commercialized, it is still owned by the government, but the orientation of just service rendering has been changed to making profits. Such company or such corporation has been rejuvenated to start making profit just like any private organization. That is commercial. It has been commercialized. All right? But privatization is when the ownership is changed or transferred from government to private individuals. So the correct answer for this question is option C, privatization. Let's see the next question. Taxes and government expenditures are instruments of, I've also mentioned this in the course of my explanation earlier when I was talking about central bank, okay? Monetary policy, tax policy, economic policy, fiscal policy. Fiscal policy is basically within the jurisdiction of the government, particularly the executive arm of government, to control the economy. And by so doing, they do taxes. In fact, we have one that's ongoing right now. The new tax policy that fiscal policy released by the current government in Nigeria. All right? And people are still studying it. People are still making complaints here and there, such a way where there's multiple taxes being paid by the people. Okay? So option D is the correct answer. We look at the next question. The full meaning of NAPEP is, NAPEP was introduced not too long ago in Nigeria as a means of eradicating poverty. And that's why they introduced this tricycle you see all around. People call it Keke NAPEP. Those tricycle, Keke NAPEP. It is called National Poverty Eradication Program. That is the meaning. All right? Option A is the correct answer. All right? A firm owned and managed by a family is an example of a family. Just say a person, one person. A public corporation, that can be, that owns by the government. A corporate society, that's a lot of people, group of people. A sole proprietorship, of course, so one. And then partnership, more than one, 2 or 3 people come together. So the correct answer to this question is what? Is sole proprietorship, one-man business, a family business, from father to son, and what I be, or father and son, Nigeria Limited. Okay, that is sole proprietorship. Option C. The next question. Which of the following factors of production is relatively inelastic in supply? We have the 4 factors of production as stated here: land, labor, capital, and of course, the entrepreneur. Okay? Now, the question is, among these 4 factors, which of them is relatively inelastic? The word inelastic means, at least in the short run, does not change. Does not change. Inelastic does not change. It's inelastic in supply. Does not change because it's just there. Something should come to your mind among these 4 factors. Land should come to your mind. Why? We say land is a free gift of nature. Nature has given us this land as in abundant supply everywhere. You understand? To the point that I'm not sure we can even finish using the land that the nature has given to us, either for building, for production processes, for farming, or what have you. Okay? So land comes to mind. Option C. Okay? The next question. Sure, you're enjoying the class, right? So please subscribe and also share the link for others to enjoy. Now, let's see the next question now. Which of the following institutions does not operate in the money market. What is a money market? A money market is a market where you can get short-term credit facility, short-term loan, 6 months, 1 month, 1 year, all right? Where you can get such credit facility is called money market. It's different from capital market where you can get what? Long-term facility, okay? You can do business deal for long time, okay? Central bank, mortgage bank, money deposit bank, insurance bank. Okay, when you say money deposit bank, it's another name for commercial banks, okay, because you deposit your money with them, all right? Now, if you look at this, the first three are banks, and it should come to mind as correct. Insurance companies do not deal like that with capital supplies. You understand? But in this case, there are two answers to this question. Two answers to this question. One, remember we are talking about which of them does not. That means one is incorrect. But unfortunately, there are two that are incorrect here. One, mortgage banks. Mortgage bank don't give short-term loan, short-term credit facility. Mortgage bank don't deal as such in money market. Okay? What is mortgage bank? When they give you credit facility for buildings, for properties, and you're expected to pay back in long term. It's a long term, not short term. Money market is short term, okay? But insurance company has little or nothing to do with this in this particular discussion, you understand? But for the purpose of this question, we can just pick option D, all right? But in a real discussion of money market, mortgage bank is not part, all right? And for this question, the answer is option D, all right? Now, let's go to the next question. Other products gotten from petroleum include the following, except. Always be mindful of the word except, that adjective. In other words, all of them are correct, only one is what? Wrong. So which of these products are not byproducts of petroleum? No, people don't know that when we say petroleum, there's so much byproducts for not just crude oil, not just petrol, not just kerosene. There's so many other byproducts from petroleum. For instance, people don't know that the plastics you have in your houses are byproducts of petroleum. Yes. Okay? Even some of your cream, petroleum jelly, they are byproducts of petroleum. All right? So let's see. So which of these? Rubber, fuel, paint, insecticides. Of course, fuel is a major product. Petrol, you call PMS, petrol. Okay? Yeah, paint, even from the scent, from the smell, you will know, has something to do with fuel. That's why when you want it to be lighter, you dilute it with fuel or with kerosene. The insecticides are also from chemicals. They are biochemicals from petrol. But when we say rubber, some people will be tempted to say rubber. But you don't know there's a difference between rubber and what? Plastics. They are not the same. In your houses, you have all these utensils, rubber in your kitchens. You have rubber in your toilet. You have rubbers and you have, what do you call it, plastics. They're not the same. They're not from the same source. Okay? Rubber comes from natural source. In the farm. Okay? I think we have rubber tree or whatever they call it. But when you say plastic, it's a byproduct here. So the correct answer to this question, which does not belong to this lineup, is option A, rubber. Okay? If it will be plastic, if they have put plastic there, then there won't be any answer. Because plastic is also a byproduct of petroleum. Let's see the next question. The law of variable proportions is also known as, look at the word variable. Variable means changes. Changes. In other words, total product change, then the marginal product also changes. All right? So it's also known as law of demand. It can be, of course, you know. Law of return to scale cannot be. Diminishing returns, no. It is law of diminishing marginal utility. The variable. I've explained the marginal utility earlier. The one marginal means one additional unit or one extra unit added, okay, to the total unit. So law of diminishing marginal utility. Option C. I've explained that in one of the questions we answered today earlier. All right? Let's see the next question. All the following are problems identified with agriculture in West Africa except, the word except again. All these are problems in agriculture, only one is not. Let's see. Land tenure system, ignorance of the farmers, use of crude implement, provision of food for the teeming population. If you are providing food for the teeming population, is that a problem? No. That is a plus for us. In fact, that is the ultimate of any society, particularly in Nigeria. This is where we are aiming and going. When government is banning rice, we are saying that, okay, are we able to produce local rice to the point that is sufficient for everybody? Okay? So this D is not a problem. All right? It's a plus for us. It's an advantage and does not belong to this set. Option D is the correct answer. All right? The next question. The choice of how to produce in a command economy is determined by the, I've mentioned this earlier when I was talking about the price mechanism. When we say command economy, it's another name for what? Socialist economy. Or you call it centrally planned economy. Or you call it state-controlled economy or public control economy. That's command economy. So who answer those questions? How to produce, what to produce, and for whom to produce in this kind of economy? The government, the consumer, the industrialists, the labor unions. The answer is what? The government. If it's industrialist, then you call it what? Capitalist economy or laissez-faire, free enterprise economy. So the answer is option B, option A, government. Government means the state, the public. Okay? Let's see the next question. Okay, this is just like opposite to the question I just answered now. In capitalist economies, that's opposite of socialist. Questions about what to produce are ultimately answered by who? Income level household, available technical skills, output decision of firms, holding decision of household. All right? The correct answer to this question is what? The decisions of firms. Firms, you can see firms. These firms are industries that are owned by what? The bourgeoisies, the industrialists, the capitalists. Okay? Option C is the correct answer. All right? I think at this point, we'll come to the end of this session. Please subscribe to the channel, share with your friends, okay, the link. And if you have any question, you are free to drop them with us. We'll find time to attend to them. Thank you.
Hi, I'm sure you enjoyed the content you just watched. To see more episodes as that, preparing you for your oncoming exams, smash the subscribe button on this channel right now and visit the playlist that we've made for you, covering over 50 types of different exams, including JAMB, WAEC, Cacao,